Welcome to Primary Markets TV. I'm Dan Barnes. This is your update on new issues in the equity and fixed income space. Joining me today is Santino Bibbo, Managing Director at Cabrera Capital Markets. And we're going to be discussing how he adds value to the new issuance process. Santino, welcome to the show.
Hi, Dan. Thanks for having me.
So you guys have been involved in deals as co-manager for Morgan Stanley, Citi and Bank of America. How would you characterize investor appetite at the moment, and what do you base that on?
It's been a great start of the year. A lot of deals have seen a lot of support from investors. This month, we saw roughly 130 billion priced in the IG, investment grade US, and there was a jumbo deal priced from 7-Eleven. They start marketing the bonds in Asia. And by the time it got to price in New York, the deal was 6 times oversubscribed with almost 65 billion in book size. The way I measure appetite, books is one, but also how the market is performing. And we look at new issue concessions, which is in basis points what dealers require to price a transaction. Yep. And if we compare January versus December, essentially we're at the same level. Right now, the average new issue concession for the month is -2 basis points. Back in March of last year, we would see new issue concessions coming in at double digits. So that gives you a measure on the leverage that investors have right now. And then finally, looking at bond fund flows, this week we saw another 6 billion in net inflows in investment grade bond funds. And that's the 11th consecutive month that we see that. So strong appetite, strong market, and great performance. So issuers, are confident in taking their deals to market right now.
And then in the deals that you were involved in, explain to us, how do you add value to the process?
Sure. So typically, if we work as a lead manager or co-lead manager, we work with the lead of the syndicate, structuring the offering, providing marketing ideas and views. But in many cases, the bread and butter of this firm, Cabrera Capital, is to create a diverse base of investors for our clients. Typically here at the firm, we have 400 plus investor account relationships, of which I'd say 65% are represented by second and third tier accounts. And with that, I mean, investor accounts have, 500 billion or less in AUM. Mm-hmm. What we do is tap some of these accounts in order to create some, more liquidity and provide more transparency on the pricing conditions. So this is very important. And in the long term, works really well for issuers because, again, you don't want your bonds to be controlled by just few investors. So that's how we create value.
Typically in primary markets for fixed income as opposed to equities, and equities, new issuance can take place over sort of up to 2 weeks. But in primary markets, it's more sort of usually within a day in fixed income. So I'm guessing that there hasn't been a lot of impact from people remote working, as there might have been for the sort of roadshows we see in equities.
No, it has not. And, we work with a lot of our accounts throughout, our secondary desk, and we'll look at a pre-marketing approach, understanding what's their preference. I think remote has been fine. And as I said, if you look at the volume last year, we had a record year. So I don't see any change going forward.
How are middle markets firms building relationships in the market in the current environment then?
So one thing that we did last year, and certainly we're going to work on that as well this year, is strengthening our relationship within the broker-dealer community and with large banks as well. Perhaps on certain deals, we did not have the expertise needed because of the structure. Or, we worked on reverse inquiries. Those are transactions where the interest comes from the investor, and then we work backwards with the issuer trying to print a deal. So relationships with some of the large firms, that's one way. The other is really like paying attention to the capital structure of our clients and making sure that we follow the dynamics, that we understand what is their need, and, that we provide tailored solutions. Charter Communications last year started what they call a Spectrum Community Loan Fund, essentially a fund that would invest in CDFIs and would support small businesses in a lot of the local communities. We act as a financial advisor on that, And that's core to our mission because we supported some of the businesses that had a difficult time last year.
Compared to last year, which, as you said, was a record, how do you think this year's going to look?
If we look at the investment grade market, certainly has underperformed for January. I believe the Barclays Bloomberg U.S. Investment Grade Index is down 1% for the month. So high yield and municipals, especially leveraged loans, have performed better. But let's face it, U.S. investment grade bonds is a great place to be and provides a great risk return for a lot of investors. And that's why we see this appetite that keeps coming back. If we look at the rest of the year, there's a lot of volatility in place due to the different variances on the vaccines. And also on the other side, we have a new administration here in the US. So if they start touching the tax code again, perhaps we'll see some changes on the funding plans for some of the companies. But all in all, I think this is going to be an active year. Certainly, investors are ready to support issuers that will bring deals to market.
That's fantastic. Santino, thank you so much.
It is my pleasure. Thanks for having me on, Dan.